and welcome back to the Property Education Company. I'm Louise, and I'm delighted today to welcome Richard Atkinson from Illion. Richard is actually the General Manager of Illion's Open Banking Solutions. So welcome, Richard.
Thank you. Great to be here.
Now, people will be wondering, who is Illion and what do they do? And of course, you are vitally important to mortgage brokers. So
Yeah.
can you tell us a little bit about what your company is about and how it started?
Absolutely. So we're a privately owned company. We operate here in Australia and New Zealand. Our background is we were part of the Dun& Bradstreet group, and possibly more widely known as Dun& Bradstreet. We came into private ownership in Australia about 8-9 years ago and have been privately owned ever since. We run in Australia and New Zealand, we run a consumer credit bureau, which will be most interest to the broker community. We also run a commercial credit bureau. And we have a range of solutions for our customers in that credit lending space, be they individual or retail credit lending. So we can help identify and verify individuals. We have our bank statements and our open banking solutions that we'll talk a little bit more about here. Obviously, our bureau products and our risk products and products that let you manage or monitor the risk of individuals and businesses through your lifetime with them. So not just about onboarding, but that lifetime relationship for the lenders with those customers.
Okay, so this is of interest to people. How is it affecting clients? Well, let's go back to where you sit in the scheme of things. How many credit agencies operate in Australia? And are you particularly associated with one lender or particular lenders or all lenders? What's the go?
Yeah, so very happy to talk a bit about the structure there. So there are 3 consumer credit bureaus in Australia. There's the Illion Bureau, Equifax, and Experian. So there's 3 of us. The way we collect our data, and it's worth kind of understanding this a little bit, and there's 2 types of data collection we do. We all do. We all do the same thing. There's what's called negative information, and there's what's called positive information. So negative information is every time an individual makes a credit inquiry, that inquiry is sent to the bureau that has a relationship with that credit provider. So this is why, and it's worth noting, not all bureaus have all of the data. So each bureau will have the data we collect from our commercial partners. So Illion have relationships with certain commercial partners. We're collecting that inquiry information from those partners. And Equifax and Experian do exactly the same. There are larger banks that will be providing information to all of the bureaus, but you'll find a number of the smaller lenders may not be. And so some information will be on our bureau and some information will be on the other bureaus. As I say, we have the negative information. So when you make a credit inquiry, and then what's called positive information, which is comprehensive credit reporting. So banks, and there's about 100 of them that are in the comprehensive credit reporting regime, provide to each of the bureaus on a monthly basis all of their accounts that they hold. So not just the inquiries. If you have a mortgage with a bank, we'd be getting the fact that you have a mortgage. We might also get the amount that you still have owed or the amount that was originally on the mortgage, and we'll get your repayment history. So we have, for those banks, 24 months of how you're paying your loan, which when we think, and we'll talk more about how we calculate credit scores, but when we think about what a credit score is, the fact that you've applied for, say, a credit card, all we know is you've applied. We don't even know if you've actually got that card, whether you've still got that card, how you've paid off that card. So it's useful information, but comprehensive credit reporting tells us not only have you got a credit card, tells you that you're using it, tells us that you're repaying it or that you're not repaying it. So much richer data set, and obviously the richer the data set, the better our ability to predict the credit risk for the individual.
Lenders. Yes, exactly. I love answering this question for clients, but how does one get a credit file? Because the old furphy is you have to have a credit card to get a credit file and have some credit history. But what's your view?
So I think there's 2 aspects to that. So if you want to access your credit file and see what's on it, then each of the bureaus and Illion are exactly the same. We have a website, and if you Google Illion Credit Check, that will direct you to our website. You can verify your identity. You'll need your driving license or passport to verify your identity. And then you can access your credit file how many times you want. Knock yourself out, do it every day if you so wish.
Oh,
And
okay.
we will never charge you for doing that. We would encourage everyone to do that. Have a look what's on your credit file and make sure that everything that is there should be there. And if there's something there that shouldn't be there, raise it with the credit bureau. Again, on our website, there'll be details of how you can contact us. And yeah, if we've got some information there that shouldn't be there, let us know. We will take it off of your credit file. So that's
Really
how
good
you
to know,
act.
because not everyone gives free access all the time.
By law, all of the bureaus have to provide free access at least once every 3 months. So Experian and Equifax will do the same. I genuinely don't know whether they'll charge you if you do it more than every 3 months. We won't. But absolutely encourage you to do that and understand what's on your credit file. If you haven't got a credit file, the times when a credit file is created is when we first see information about an individual. So we're typically talking young people who are yet to have a credit experience or new to country. And they will not have a credit file until they've had their first credit experience, which is typically mobile phone, some form of phone,
Yes.
or maybe a buy now, pay later account for a younger person. So those are then the first experience of credit that will cause the credit file to be created. At that stage, it'll be what we call a thin file because there's not a lot of information in that file. And that's why traditionally you're told to get that credit card, creates the credit file, pay the credit card off. That creates the history of repayments. That's still true. That still exhibits good credit behavior, which will build towards a better credit score. So that is still true, but credit files are only one of the sources of information that a lender will use when assessing whether they should be lending to an individual.
And now we find that banks will assess your savings history with much more rigorous attention than they previously did. So if you're a good saver, don't worry about getting a credit card. Just keep saving. It's fine. We can show the lenders whatever you need just by showing you good savings and always keeping that account in the black, not the red. So that's the main thing, because now they can see all your savings accounts too, can't they?
They can. So I think we'll talk about bank transaction and open banking. So at Illion, we've had our bankstatements.com.au product for many years now.
We have been with you and paying for many years. You've known long-term client. Almost from the start, mate. Almost from the start.
Wonderful. And hopefully getting lots of value.
Yeah, I love it.
So that product has all of the time up till now has used what's called screen scraping. So the end customer provides access to their bank accounts by providing us with their bank credentials. We then use that on their behalf to access their online bank portal, and we extract from their information on the accounts that they have in there. That can be credit cards, it can be bank accounts, as you say, savings, income. Very, very rich source of data. When you think that consumer credit file is just your best case scenario, it's the fact you've got some credit cards and you're paying off some personal loans. Looking at bank transaction data, we can see, or the lender can see on your behalf, your income. We can see how much you earn versus how much you spend. You can see spend behaviors, which may be good, may be bad, but you can absolutely get a much richer view of an individual's actual credit behavior and their ability to repay a loan. As I say, today we do that primarily via screen scraping. Consumer data right has come into Australia. There are now about 80 banks providing data via the consumer data right. And bank statements within the next month will be making consumer data right data available in bank statements. And our principle is we want to allow brokers, lenders, consumers choose how they wish to share their data. They may be very happy to use screen scraping. They may want to use consumer data right where it's available. And again, thinking it's available for 80 banks, but hey, it's not available for all of the credit card companies or the non-bank lenders. So there are still segments where you can't use consumer data right to access the information.
You're saying you're giving banks or brokers the right to have a look at your accounts without actually screen scraping.
Exactly right. Now, while we would obviously and rightly defend the security of screen scraping, the way we have implemented screen scraping, it is, at least in our opinion, completely secure. We don't store your credentials. They're not sat there on some server so they could be hacked and used. They're absolutely not. But consumer data right does provide an even better solution in that as you, as an individual, receive a request from Illion to share that data, you are then interacting with your lender to permission that lender to send that data to Illion, in our case, and it's sent over a digital mechanism. So we're not having to go in and rely on all the data being on the bank's website in the same format, it's a defined mechanism. So it should be more reliable and easier, quicker, just simplistically, just all round better than screen scraping as we move forward. We're going to go through a period of acceptance. The consumers have to understand it and accept it.
Right.
Frankly, the lender has to be happy with the data, because a nuance within CDR is we get all the transactional data, but we don't get that PDF of the transaction statement that you do get via screen scraping. And a lot of lenders want to see, I want to see a PDF from CBA. I want to see their transaction statement. You don't get that via CDR. So there's work to do with the lenders in terms of
Getting what
accepting
you want.
CDR data. Exactly right. So that's an ongoing challenge for the industry that we're working through. So it's not going to be flick the switch and overnight we'll all use CDR, but over the next year, 2 years, it's absolutely going to go that way.
Brilliant. And that could save a lot of people having that angst over it because they're controlling it, really, aren't they?
Exactly right. It
And it's
absolutely
only a
puts-
view. It's nothing more than a view, you know?
I think that's a really important point. The way it's implemented and it's governed by the ACCC, it's a regulated environment. Providers like ourselves have to go through an accreditation process to be able to access that data, and we can only view the data. So you can have absolute certainty in the security of that extraction mechanism.
Brilliant. Let's talk about how people can affect their files negatively, because sometimes we get files and what happened here?
It's still true that if there's a lot of inquiries on a file, it's a real balance. No inquiries, bad thing. Too many inquiries, bad thing.
Hang on. You can overcome no inquiries.
You
Improving-
can.
That's the
Exactly
easy.
right.
But overcoming too many
Too
inquiries
many.
is a lot harder.
Is a lot harder. So we would say, I mean, and this is a genuine challenge, right? So on one hand, you'd say, look, shop around, make sure you're getting the best product, but do just bear in mind that, if you've got 15 personal loan inquiries on your file, that's probably going to have a negative impact on your credit score.
I would say 5, actually. I
That's
would say a
right.
lot less than 15. I've seen it very badly affected files. Yeah.
Exactly. And we're looking at behaviors, and we're also looking at historic behaviors in terms of there are behaviors we've seen historically that are indicative of individuals going bad. So
Mhm.
it's not a case where we're making judgment calls or making this up. Everything that we do is based on historical evidence. And historically, as you say, if you're getting multiple personal loan inquiries, multiple SAC-MAC inquiries, these are indicators of things that are
What do you
going
mean
bad.
by that?
Short-term lending. So,
Right.
small amount credit contracts. So loans of less than $2,000, typically for quite a short term, and at a very high interest rate. So it's a credit product that carries quite a high cost and therefore indicates potentially individuals that are struggling from a cash flow perspective.
Right. Exactly. Spot on. So what to do? Well, first advice is use a broker, because the broker has the one hit and we can assess you at lots of lenders without you having to do the legwork for yourself and prevent that many multiple hits on your file.
Can I go even further than that, Louise?
Oh, yes, you can.
100% use a broker. When a broker accesses your credit file, they're doing that as what's called an access seeker, because a broker is not a credit provider. So it's not a credit inquiry that is going on your file. So the broker accesses the full file, and brokers understand what's on your file and can provide you as an individual fantastic advice of what you're doing. It leaves no credit inquiry on your file and therefore has zero impact on your credit score. So 100% go and use a broker.
Brilliant. Thank you. I love that tip. I'm going to definitely cut that one. Thank you so much. But absolutely true, because we do get access. And I have seen people in the past being declined a loan automatically because of hits on their credit file that we weren't aware of. And then suddenly can't get them credit at certain lenders because they use automatic credit scoring. So you're done. And before we've even begun. So it's tricky. So let's talk about, how do the new buy now, pay later providers affect your credit file?
So at the moment, I think when we think buy now, pay later, we do have to think that at the moment, not all buy now, pay later providers are using credit inquiries. So that's in the process of potentially changing. So there's some legislation that the government's working on around how they want buy now, pay later providers to interact with the credit ecosystem. So on one hand, it's a bit of a challenge in the current system because that absence of all buy now, pay later inquiries on any of the bureaus means that you're not seeing that behavior. Now, there are some that do inquire. What we do, and it kind of goes back to what I
If
was
it's
saying
hang
about,
on, you can see it because you go into their savings account and they're paying it.
and,
That's
and
how
you'll see,
that's how
well,
yeah.
and yeah, but you should come and work for us, Louise.
No, no, we've got enough on our end. Thanks. But it's so true because we have to scroll your savings account and we'll go, hello, what's this?
What's this? Exactly right. So it's not on the credit bureau. It is absolutely in your bank statements extract and would be in your consumer data right extract as well.
Mm.
What we're saying, it goes back to the behavior and how our smart guys who create our credit scores work. So they look at, is there a cause and effect in terms of lots of buy now, pay later inquiries? Does that equate to someone being a bad credit risk? To date, we're not seeing that. So
Right.
as of today, you should not see a significant impact on your credit file if you are using a buy now, pay later provider who is performing a credit inquiry. It's not to say that that's always going to be the case, because should there be a causal impact, then yeah, absolutely, credit scores would change down the track. I think what's more likely to happen is as buy now, pay later providers are made to make those credit inquiries, the credit score will actually affect the reality of what's happening. And if you've got 5 different buy now, pay later providers that you've inquired with, that's probably not, again, it's probably a bad indicator. It may or may not be, but it would be a potential red flag.
It is. It's a red flag.
But that would be, again, potentially an easy one to fix. Just stop some of those relationships. And
Yes,
if you've got 5
absolutely.
credit cards, close some of those credit cards. There are actions you can take that will impact your credit score positively.
Brilliant. No, absolutely. And just as a note, please provide us with the closed letters because we often have to use them to provide to a lender to show that you have actually closed these facilities. But anyway,
Yeah.
so let's talk about what is considered a good credit score or a good result. And what's the difference between a credit file and a credit score?
So the credit file is all of the information you have, while the credit score is, I guess, a distillation of all of that information into a single numeric. We at Ilium, we score between 0 and 1,000. Equifax, I think, score between 0 and 1,200. Essentially, it's a numeric range, and the higher your credit score, the better credit risk you're going to be considered. What each lender will do is they will have their own credit risk policy. And frankly, they're actually going to use a multitude of data sets. So they're not just going to use your credit score. It's probably going to be one of the factors that they look at. And it really does depend who your lender is, what kind of product you're trying to purchase from that lender, as to what kind of credit score you need. Anything above 750 is very good from a scale of 0 to 1,000. Less than 500 for a mortgage depends on the lender, but you may be needing to provide other evidence. And you can have a score of less than 500, but you could have fantastic income. You could have a score of 1,000 and have no income. You're probably not going to get that mortgage. So your credit score is just one of those parameters that a lender will look at.
Totally. And it concerns me, people really are better off getting a full credit file and checking what's on it rather than just relying on these people who say, get your score, get your score.
100%. Yes. The full credit file and the income and expenditure data. And I hate to plug you guys again, work with a broker on how you can present that, what behaviors you can change to get the best mortgage from the best provider for your circumstance.
Because I found in the past, I've had a client, people going, they're just putting their data into credit score bureaus who are just collecting their data, but not giving them anything. You're better off going to one of you guys who actually do credit files. So just so you know that, people. Now, we talked a bit about bankstatements.com and you talked about them being secure. So what advice do you have for people using these links? Because people often, sometimes are a bit insecure about them or feel conflicted. And we've used them. It's been great the whole time. And we're very grateful to have the information because when I have to meet people on Zoom and explain, please, this, and this, and they're like, why? What do you mean? And they never seem to get it because they're honest and they don't see what we see from behind the scenes, that if you were dishonest, how you couldn't fudge it.
Yeah, and I completely get it. And I think it's one of the main arguments for why CDR will really help. So bank statements, the business has been around for about 9 years now. To our knowledge, we've not had a single individual whose account has been compromised because they've shared credentials with us. We are audited. Our software's audited. We don't store those credentials in the clear. So if they are stored, if you're using us for a PFM type scenario where you're going to have your account pulled over and over again, the data's stored encrypted. We can't access it. So there's a separation between the data, the encryption, and the key. When the key is actually not held by Illion at all. So it is a secure mechanism, but, and again, this is where we go back to CDR. Ultimately, that comes down to, let's face it, it's secure because I'm telling you it's secure. I can show you the auditing we've had, but there's no government kind of stamp in the box. So I understand consumers' concerns around that. As we move to CDR, what that does provide is that government stamp in the box. You can safely know that that's secure because there's a tick mark that is provided by the regulator. The regulator insists on audits for all of the accredited data recipients. There's a process we go through, and the mechanisms that are used are more secure.
How do you suggest people protect themselves from fraud on their accounts through your service? Because you have facilities to help with this, don't you?
We do, and it is a great question. The first thing I'd say is get onto the bureau, get access to your credit file, and check it.
We'll put the URL in the notes, so no problem.
Thank you. And also, I'll plug the Credit Smart website as well as another source for the other bureaus as well. But do check your consumer bureau file. If you're concerned that your identity has been compromised, and unfortunately we've seen a few cases of that in the past year, you also have the option to place what's called a ban on your credit file. Now you can place that ban again. Visit illion.com.au, visit Illion Credit Check. You can place that ban with one of the bureaus. And in the process, you tick a box to say, I would also like to place the ban on the other bureaus. If you do that with us, we will send that ban request to Equifax and to Experian, and it places a ban on your file at all three of the bureaus. Initially for 20 or 28 days, I think it's 28, but for that kind of a month time frame, you can then, if you extend the ban within that period, it extends for a year. It means no one can access your credit file in that period of time. So if someone had stolen your identity and applied for a loan, they would get the fact from us at that application point. The lender would find out there's a ban on the file. The lender's just not going to provide the loan. The danger is, if you've extended it, it's there for a year. When you go and apply for that loan, the lender's going to say, no, you can't have it. There are mechanisms. You get a reference number for us. You can then come back to our website and you can request that the ban is taken off. So you can control that. So you are in full control of that ban. But we do have quite a few people, and I'm not blaming anyone. When the big telco had its breach, a lot of people placed bans on their files. And then kind of 4 months later, we're getting people saying, I can't get any credit. And saying, if you placed a ban on your file, you've got to take the ban off. So it creates that tension in the system. But it is a great mechanism for making sure no one can gain credit with your compromised identity. And then do all the big things, change your driving license, card number. If passport's been compromised, go and get a new passport.
Mm-hmm. Yeah. Although I must say, I did find it bizarre when the data was hacked at some point and they changed your driver's license by one. I just like, you're changing everyone by one. Isn't that a bit stupid?
It will fail. So the way the checks work, and we had literally kind of 6 to 12 months before that changed the way we identify or verify driving licenses from using the card number, which never changes. Sorry, using the driving license number, which never changes, to use the card number.
Yeah.
If we hadn't done that, you had to get an entirely new driving license. So if you don't have the right card number, it will fail. It is true. They could have a guess of the card number.
But that's not so easy.
Not so easy, but yeah.
Brilliant. So people accessing their file just can go to the website and quickly log in with their driver's license and work history or something like that, and then away.
Typically driving license or passport, just on the first time to get your account set up. Then you get a username and password. You can go back in there as often as you like and check what's on your file. And as I say, if there's something that shouldn't be there, contact us through the contact details are there. What the mechanism then happens is we reach out to the lender who you're querying. We query that with the lender. The lender comes back and says, no, it's real, or no, it isn't. And we can update the credit file.
Thank you. What happened, I've had a client a few years ago now, but he was applying and he was excellent credit as far as we could see. We didn't even do a check. And when it went to the bank, they said, oh, he's got a unpaid electricity account. I said, that seems very odd. Give us the details. So they gave us the address and things. So I asked him, he said, no, I've never lived there. It was someone had taken his driver's license
There you
and
go.
used it and to get a tenancy and paid for electricity or not paid the
Not paid for the electricity. Exactly
Yeah.
right. Great example of why you really should check that credit file.
And he had no idea, and neither did we until we actually applied at the lender. And he had to report the fraud to the police. But it was okay in the end. Of course, we got the loan. But it's interesting to note how careful you've got to be with your credit file. Well, Richard, it's been an absolute pleasure. I've really enjoyed this conversation about what you do and all the credit opportunities that are coming up, because that's going to be a big change. And I know we can help. It'll hopefully make people feel even more safe using us. Out of those 80 lenders, are most of the majors involved?
Anyone who's an authorized deposit taking institution, so all of the banks are currently involved in the CDR. It will expand over the next couple of years to involve larger non-bank lenders. So that'll wrap in the big credit card companies, the buy now, pay later companies, the auto financiers. They will all come into the scheme over the next couple of years.
Brilliant. Great to know. Well, thanks again. And we will put your details in the chat notes. And thank you for your time. Wonderful. Thank you very much.
Very good. Thank you, Louise.